Well, guys, our next article is from CNBC. This is about the Fed, and I want to talk about this. Wall Street still sees 2 rate cuts this year, but conviction is getting weaker. Obviously, going to the end of the year and then coming out into January, having the inauguration, the Fed gets really quiet. It's also this season of year where all that aggregate data from the end of Q4 and the end of 2024 is kind of being finalized, and they're dotting their I's and crossing their T's, all this stuff. You have final inflation readings, you have GDP readings, you have end-of-year non-farm payroll and unemployment stuff, and everyone's looking at, okay, well, did they gauge it right or did they gauge it wrong? And there's lots of varying opinions, but I have some graphs we're going to put on the screen here, but let's just talk first of all about what the heck is going to have to happen for the Fed to actually drop rates. Do you think it's going to be policy pressure, political pressure? Do you think it's going to be data and numbers? What do you guys project is going to be?
I have the answer.
Do something or don't do something.
I have the answer.
What is it?
It's, Trump. He already said it. He already told them, you got to freaking control inflation. How did you get us here? You got to stop that. So there you go, Trump doing it again.
So then the translation is they're going to leave rates to try to control inflation because by reducing them, inflation would get hotter? Is that what you're saying?
And obviously, listen, audience, you guys going to hear this. Trump already demanded that interest rates go down, that we control inflation. We already know that he's not going to be the determining factor, okay? He could influence somewhat the decision, but he doesn't control that.
But the technical argument is that low rates cause high inflation. So it's like, how can we have both things working at the same time? And I understand we've had pockets of that where it's like, how come inflation is going up at the same time that rates are going up? But there's nuances to all those things. I'm not going to go in the rabbit hole about all that. Yeah. So do you think that then what you're saying is, do you think they're even going to do 2 rate cuts this year? Or do you think it could be like 1?
No, I really feel, again, I'm going to go back to our deficit, all these things. It's going to be detrimental for our federal government to actually do these rate cuts. They're going to need to do it. It's going to happen. So if I'm going to look at this,
you mean if they don't do it because of how much they have to refinance?
Oh yeah, exactly. I think it's just not going to be in their favor. I really feel that there's going to be 2 rate cuts. I'm going to go with it.
Okay.
We just started the new year. All these policies are coming into effect. The whole tariffs and all these things. We don't know what that's going to cause, what ripple effect it'll have, and it's just going to take some time.
Yeah, and I think these last couple of meetings, the Fed had hold still on like we're data dependent, we're going to follow data. But with what Will said, we know Trump is pressuring, and he's going to be making his advances and saying, hey, we need to get this lower, we need to do this. And I feel that, although they won't say, hey, Trump was the one that did it, there's going to be some altering in the data that's going to then bring forth the Fed to say, hey, based on the data, we can now start moving in this direction, dropping rates. But Trump from the get-go is hounding Powell, hounding the Fed, saying, hey, you need to drop it. And although Powell said, hey, I'm going to hold my ground, I'm not going to take anything from the president, they're having conversations behind closed doors. They're going back and forth and saying, hey, I need this. And at the end of the day, Trump loves to make deals. So when a deal gets, brought forth and it makes sense for everybody, I think that's when they're going to come out with the data now makes more sense and we can, bring rates down.
Okay, so I'm going to tell you guys the backstory, and then I'm going to ask you your opinion on what you think is going to happen. So I'm going to tell you what the story was, I'll tell you what I said, and then you tell me what you think, okay? So we have a past client of ours who's also a friend of mine who at a family gathering the other day was like, hey, so what do you think is going to happen with Jerome Powell and President Trump? And I said, well, it's going to be one of 2 things. And that's just my kind of knee-jerk reaction. So, I didn't really think it through too much, but I'm like, okay, like if I have to answer right now on the spot, and here's what it is. He's putting this public pressure on Jerome Powell that Jerome Powell's going to respond to by either digging his heels in and holding on his policy statements, or he's going to have to cave to, which is going to make him look bad, and that the government does influence the Fed, which they say they don't. Okay, so there's kind of one angle. If Jerome Powell holds his feet and rejects the pressure coming from the president, then the president's going to have the ball in his court, and he's going to react in some way, maybe firing Jerome Powell or suggesting he get removed, and that's going to look politically potentially bad, right? So I said they're playing this massive game of chicken right now, and I don't think that the first one who flinches is the loser. Yeah. Because I think that because there's so much data behind it, and there's just so many things flying out of the White House every day right now. It's taken us a really long time to get here. It's going to take us a while to get out of it even still. So I said, I think they're playing a game of chicken. I said, I don't think either one is going to want to flinch first, but I think it's going to be the Fed that's going to flinch first. Yeah. Okay, so that's what I said. What do you guys think?
Yeah, I think you're right on.
I think 100%. Trump's whole, he's okay.
He's going to hold his ground.
Yeah, he's okay. Continue grilling and holding his ground because he's coming in with all this momentum. Whereas Jerome now has the momentum. I mean, the pressure from the past presidency of like, hey, why hasn't things changed? Now we're into this new presidency. We know Trump's pushing for it. Pal, what's going on with you, bro?
That's it. He's all the pressure's on him. You've been there for 4 years. How do you fix this?
And Trump's coming in with fresh ideas.
Yeah, and Trump already had told him even prior to the presidency, like Jerome Powell's not going to be there. He had already talked. He already had that conversation. I just love how everything is just like they teeter-totting now. When you're asking certain questions, the last Fed meeting, when they're asking Jerome Powell the questions, he's just teeter-totting with the answering that question. He's always just kind of vaguely, So we're going to see on March 19th, next month, let's see if the rate hike, just like you said here, you're going to post up, there's a 65% chance. I know that was much higher, in the beginning of the year, but now it's actually it's gone down.
Did you guys hear him say soft landing?
Soft landing again.
Did you hear him say it?
No, I did not.
Yeah, it's because he didn't say it.
Oh, okay. I was like, I didn't hear that much. Did I miss it?
Gotcha.
Yeah, gotcha.
That was a setup. So on your screen right now, guys, you see the Fed expectations for cutting. So you see that 65% of those surveyed expect 2 rate cuts this year. 61% expect 1 rate cut. And they expect the terminal rate, the Fed funds terminal rate, to be at 3.4%. We're not anywhere close to that right now. So that seems like a long way to go off on the horizon. I'm not as interested in the probability of U.S. recession. And here's why. I am going to have a bone to pick about this one really quickly, which is they kind of like soft sidestepped the definition of a recession last time it actually happened of 2 consecutive quarters of negative GDP. That's not exactly what it means all the time. And there's actually situations where that could happen and it's not actually true. Fine, you're going to go ahead and throw away 50 years of saying that economically and then just for convenience. I can't tolerate the crap. So will Trump respect the Fed independence? It came in at 36%. I don't know. I think this is what Brian's talking about. The president wants what he wants, and he's going to bark about it until he gets what he wants or shuts up. I don't know. But quickly, I want to go to this next one. So this came from Peter Bookvar, which Peter Bookvar has a voice in this argument very regularly with the Fed. And he says, I just don't see the Fed having any confidence right now on how to proceed with rate cuts from here, especially so as we await Trump's tariff and tax policy. Now, some of these things are known. Some of them are not. February 1st marks the date at which some of these go into action, but there's a lot of arguments downstream about, well, who's it going to hurt? Is it going to hurt the country that's sending the items? Is it going to hurt the consumer because it's still going to be imported and there's going to put the tax on the person? I understand the arguments on both sides. I understand the historical explanations of what's worked in the past for tariffs and also where tariffs didn't go the way they planned for certain sectors of our economy. I kind of see it both ways. I don't really have a dog in the fight, but where are you guys with confidence? Like, do you think that? Do you agree with what Peter Bookvar is saying here?
So I just see a lot of just like, let's wait and see. We're 2 weeks into the presidency, and a lot of people are pressuring, going back and forth, saying, hey, that's going to happen, this is going to happen. I got an argument with one of my buddies the other day because he's saying, like, right off the bat, oh, this happened, this is going to do this is going to do that. And I'm like, I really don't know. We are going to have to wait and see. But what I can tell you is that we know what happened 4 years ago, and now we're going to have another 4 years. So I'm like, a lot of wait and see, and data dependency is what they're sticking to a lot. So I think the data is what they're going to be like really holding on to and, hiding behind as their protection to say, hey, this is the reason why we're sticking to where we're at.
Yeah. I mean, I'm just laughing because I see so much of the news. I was watching it. I don't like watching it, but it's just funny. Like, they want results already. Like, why hasn't the cost of food gone down?
Oh, I and him went back down.
Like,
we argued about that one.
That was like 2 weeks in. Like,
can I tell you what's so irritating about that is the people asking that question right now didn't give a flying fart about it going up for years straight.
Yeah.
They didn't say, raise their hand and go, how come it's going up again and again and again and again and again and again. They never asked a question on the way up, but now that they want to point the finger, and by the way, I'm not just saying this on a partisan one side of the aisle. I hate it when they do it on both sides.
Oh, 100%.
I hate selective arguments, even though, like, oh, he's making a selective argument right now.
I'm gonna use a quick example. Obviously, we're in the trenches. We're running credits for people. We're seeing what their financial situations are. Even in 2008, when we had the mortgage meltdown, I hadn't seen so many older people going through the financial crisis that I've been seeing today.
Whoa.
You know?
Wait. Don't say that again.
Yeah. I'm telling you, mortgage meltdown was tough. People, we were struggling. These last years, it's been a struggle for a lot of people. Obviously, we have had higher interest rates. People are in fixed incomes, but I haven't been seeing how many people are in their mid 70s to late 70s having the financial difficulties that I'm seeing now. And it's pretty sad because they have a ton of equity in their property, but because their credit scores are so low, there's really minimal options. And then when you talk about these reverse mortgages, because the rates are so high, the terms really don't fit them. So I'm seeing a lot of this right now. I've never seen this before.
I was quickly startled only because, sorry, Brian. I was quickly startled only because you're making a comparison to like the largest economic calamity since really the Great Depression of 1929.
Yeah.
People can talk about the savings loan crisis of the 80s. That's kind of a different thing. But like the whole financial collapse of 08 and 09 was massive. And you're saying right now you're seeing more people in their senior years struggling today than were struggling back then.
Yes.
And
that's my experience
that's a
right
shot
now in the industry.
And I've heard
that's a shot across the bow. That's
I've
crazy.
heard the conversations you've had, and it's kind of like, it's interesting, and at the same time throws me off because it's like they're so mentally and like emotionally attached to their rate, to their house, to their payment that they're willing to sacrifice. I mean, not sacrifice that to then still keep all their debt, so go through whatever they're going through because of the fact that no, I can't touch this. No, I there's just no way. That's no option.
Yeah.
When it's like, you're praying to God for help. You're praying to God for that rescue. And like, hey, he's like, hey, here it is. Hey, no, that's not the one I need. No, that's not the one I need. And it's like, you have the tool to literally make all your problems go away, or at least alleviate them to some certain extent. And you're just like, no, that's not for me.
Yeah. It's happening.
Well,
whoever you're praying to.
It does speak that, sometimes behavior and past performance and it's really hard for people to break from.
Yeah.
And even if you disagree that maybe they shouldn't be as emotionally attached to those things, a lot of people are still emotionally attached to those things, and those become the things you have to overcome in order to help get them see the other side of it. So
so there's definitely help in the horizon. I think everything that we're trying to do right now with the new administration, whatever you guys need to do, just get it done. For me, even though I chose for a certain president, they don't come into presidency. I still have to abide by the rules. I still have to write it out and see what's going to happen. I'd rather be, positive than pessimistic with everything that's going to happen because we're going to have to adjust either way.
Either way, yeah.
So I want to make sure.
That's my opinion.
I want to make, and I appreciate you saying that because, look, you're the oldest one here. Okay, we've been around the longest, the two of us, but you saying that from that perspective because you are talking to these people really matters. It's like extra weight on the scale than me sitting here and saying it or him saying that. So I appreciate you making that comment.
Of course.
I wanted to make sure that we just touch on this kind of as we segue through. What you see here from CNBC is the inflation impact of promise policies. And this is always something where you hear people go campaigning and they go, oh, we're going to do this and we're going to do that. And then when I'm in office, I'm going to do this. And like, okay, well, you're pitching me. Okay. Yeah. So of those surveyed, here's what happened. We saw inflation impact, extremely inflationary, only 5%. But here's what I'm saying. Doesn't it feel like it's louder than that, isn't it?
Oh yeah.
The echo chamber is a lot louder than what this says.
Of course.
And
just like me, if I'm gonna have a party, bro, I gotta make it look like it's gonna be a big party, right? Like everybody's gonna come. So of course,
and only 5% show up.
Yeah.
Okay. Womp, womp.
Exactly.
I'm like, wait, that's gonna turn out bad if you finish that.
That just means I didn't promote it right.
I'm so sorry.
Right.
I was just gonna stick with the 5% number.
Like I thought it was gonna be the other way around. Like.
The majority of the respondents said it's somewhat inflationary, and somewhat is really a vague term, but I understand why it's there. I would love for policy-wise, forget the character, policy-wise, I would love to have some disinflation. Yeah. I think that it could help ease up some cash flow, here's why I have this theory. I didn't tell you guys I was going to say this. I had this theory that part of the whole removing of the income tax thing is to help alleviate inflation because they privately likely know that they may not actually make a big enough dent in inflation soon enough. But when you remove income tax, you know what that's going to do? That's going to actually fix prices because now all of a sudden people have extra money, they can pay the price that's there.
Yeah.
So you don't have to change anything over here. You're just going to have to adjust something down here.
Right, because if you can't afford it for $100 right now, Brian, but you either deflate the price to $90,
that's
or
harder to do.
now you have $110 and you can't afford the $100. Do you see what I'm saying?
I like that
so
one.
You might
We'll
have
go
more
with that
money
one.
in your pocket. Well, but then what that does, it just locks in prices. It doesn't have any like fun. I mean, I shouldn't say it doesn't have any, but it functionally kind of like concretes some of our pricing. Even if you change energy, margins can come back for properties, and that's going to be what people who hate capitalism are going to say and all that. So, all right, okay. Last thing here,
You
quickly,
fix
guys.
one thing, you break something else over here.
Yes, is
Economy. Stupid.
and this is a complete projection, but that's part of this show today. We've got January behind us, and I was telling everyone, hey, we're projecting some things in 2025. So on the promised policies, the effect on real growth came in at very positive and somewhat positive combined 60% of respondents. So 14% said very positive, 46% said somewhat positive, 9% said no effect, which let's say that's neutral. So you have, let's say 69% of these people said neutral, somewhat, or very positive, which I think is pretty encouraging for me, from my seat.
Yeah.
Based on what I'm seeing on these graphs, it just seems like there's a lot of uncertainty, and everybody's kind of like, oh, it's going to be somewhat positive. It might be negative. So it's like no one really knows, but that ambiguity and that uncertainty, it's what's literally keeping the markets at the edge of their seats, trying to figure out, what am I going to do next? How am I going to, is it really going to happen the way it needs to go?
I think maybe this year, Memo, we need to create something new. It's called Brian's Hope Index. And the BHI, Brian's Hope Index is pretty high for 2025. That would be really cool. We have like a hope in it. Because, I think you're right. I know I'm teasing you, but I think you're actually right.
I called it when I said there was going to be a little up on rates in December and then come right back down. And it did happen. And I said, hey, I'll be able to get a refinance. I was able to get it. And, hey, we went back to where we were at.
Yeah.
7%.
Yeah. Well, any final comments on this one, guys?
No, this is great. I like that article.
Give me my
That's
meter.
a fun one.
Give me my meter.
All right.
It's a fun one. It's a fun one.
Brian's Hope Index coming soon.